With trading, sometimes the best move is no move at all. I'm about to show you how sometimes sitting on your hands can actually be the best case scenario. Let's get into it. What's up, everybody? Welcome back to another day of trading, another day, another delta. I am Michael. Today is Thursday, March 14th, just past 3:45 here in the afternoon on the Pacific West Coast. Guys, it's been a couple days since I've actually placed any trades or made any specific adjustments, but wanted to hop in here and actually show you why sometimes that is the best case scenario. Let's hop right in. So for a couple days, I had a couple different positions getting very close to my short call, which was basically making my account pretty much my open P&L in the red, which is still in the red, about $41 down. But basically by doing nothing and sitting on my hands, we got some of the stocks to pull back a little bit, and we got the move we wanted. So let me just hop in here first with FXI and show you exactly what I had going on. So if we go to the chart first, basically I made, I think it was one roll. So I basically replaced the short 21 strike put for the 22 strike put. So I rolled it up just one strike. So I rolled it up 1 point. So this was on the 12th. So that's when we got this big up move here. So I was getting a little more, more cautious because, you know, it seems like we've been having a fair run up with FXI lately. So I wanted to collect a little bit more premium so I could have a little bit more wiggle room to play with. Now, the day after, which was yesterday, I was worried and thinking, do I roll this thing up to the 23 strike? Yet another roll. But I wanted to give myself enough room to the downside. I'm very glad I didn't do anything because today FXI is down, let's just say 2%. 1.99%, let's round up to 2%. So it's 49 cents, let's call it 50 cents down for the day. So if you see here, my position, basically I have one contract on for the put and one contract on for the call. My position for the day P&L is up $14. So now I'm so close to hitting 50% max profit. I'm literally 2 pennies away. Makes me think, had I put this working order on earlier in the day, I actually might have hit my target, but we'll see what happens tomorrow. I still have, again, 36 days to go. This is a small account, so for me, every penny counts. I'm gonna be stubborn and see if I can get to that 50% max profit. So basically get $39, or not $39, I would need $31. This 39 factors in the extra 8 cents in credit. So 70 minus 31 equals a 39. So basically I want to collect 50% of my initial trade. So moving on, GDX. This was the one that was really making me sweat, you guys. This one was having me sweating. So look at this insane run up, guys. It's like, it's vertical. It is pretty near vertical here. So yesterday here, I told myself, I was really considering rolling up to the 28 strike. And I thought to myself, you know, let me just give it one more day to see how things go, because this has had such a vertical run. So GDX was down only 1.25%. However, you can see here, I got 23 cents. It came in. So now finally my P&L on this position is back in the green. So we're looking at a $2 profit. So if I was really worried, I've been in this thing for 28 days. I made a few different rolls. You can see here, just slowly adding to my premium. But basically here, again, I'm going to be stubborn. Every penny counts. We still have 36 days to go in this position. So when we get closer to 21 days to go, give or take a few days, I'll look to see about making any other adjustment. But guys, again, today, we got a down move and my position came in. Intel is the exception to this rule right now, guys. This one I might actually have to do something soon, because this thing, I've been trying to roll this clunky iron condor, which is why I don't really like selling iron condors, because it's just a pain in the behind to roll and make adjustments. So I had to leg into this trade. So that's why you see these two different open positions. They're showing as basically, rather than Iron Condor, 2 separate spreads. It's the same trade, guys. So basically, over the last, I think since January, I've been rolling this thing, trying to get out of this earnings trade. Again, I'm being pretty stubborn because I don't want to mark a $61 loss on this small account. Intel, I don't think they're going bankrupt, so I don't have to worry about me just completely losing out on this stock. But we have $2 of premium, 209. So pretty much we have a decent amount of wiggle room here. So I'm waiting to see if we can get this bounce back again a little bit back above my break even of $43.91 on the, basically on the strike price. So the stock price has to get to $43.91 or above for me to at least break even. So we'll see. We still have, again, 36 days to go. I've talked about this before. Okay, do we go undefined, meaning do I buy back these wings? I'm not 100% sure I want to do that because my buying power, basically now it'll tie up another $726. So I'm only trading about, I think we're pretty much at 2,500. We've grown this thing. So we're roughly around $2,500 or $2,450, something like that in total account, like net liquid value. So I don't want to put all, like, so much of my account in one position and still only have, you know, a few $100s left in buying power. I want to have at least $1,000 left in buying power because the buying power will fluctuate depending on the volatility of the stock, how close it gets to a certain strike, things like that. So, but again, that is an option depending how stubborn I want to be. IWM, nothing really to do here, guys. I'm only down. This is still textbook case. Iron Condor, this is exactly where we want to be. We got a little bit more of a down move than I would have liked, but you can see here my position, I'm only down $4 on the day. No big deal. SPY, please, please. This thing was also very clunky. I hate rolling Iron Condors in SPY, so I might just mark the loss if it comes. But I mean, it might be time to roll up, but I'm being very, very stubborn, wanting this thing to finally just come down. But this is giving me COVID 2020 vibes. Like, will this ever end? I didn't think there was going to be a huge run up, right? You know, in 2020, the COVID crash, let's call it. But, you know, we had a huge bull run. So I don't know if that's another similar situation. But I think I'm going to keep the position as is because if you see here, if I want to roll this thing, guys, I'm going to literally collect pennies to limit my downside buffer. So look at this. If I want to roll all the way up to even the 497, I'm only collecting 15 cents in extra credit. And look at this thing, guys, 497. Look how close this is. 497. So 497 divided by the last was 514.95. That's only giving myself 3.5% to the downside. We just need a couple days of, you know, 1 or 2% to come down to that level. So I want to give myself enough buffer because I'm definitely short biased right now. I definitely am feeling a little bearish on this index, excuse me. So I think we are going to stay with SPY how it is. And if we have to roll out in time, we'll roll out in time and just let it go. But guys, this is, you know, defined risk position. So the max, the max I can make is $69. So basically to figure out the max loss, you do 2 because my strikes on each side are $2 wide. 2 minus, let's do 0.69. So the max I can lose on this position is $131. I think we're going to let this thing sit and just roll if we have to, if it's not too clunky. And again, just to reiterate how I figured that out, you can see here the spread. So my short put spread, here it's $2 wide. And here on the upside, it's $2 wide. So the max I can lose on either side is -2. So I can lose $2 on the side less the credit I collected. So that's how we got to the 130 whatever number it was. But that's pretty much it, guys. I didn't want to place any trades today. Let's see how the market acts and behaves tomorrow. If I'm feeling good, I'm going to put on maybe a small futures position or trade an ETF or some stock that doesn't have any earnings but has a higher implied volatility, an IVR, IV rank. Basically something that we can get a lot of premium out of. So that's all for today, guys. As always, any questions, comments, trade ideas, ideas in general, anything you're working on, drop them in the comments down below. I love learning with you all, as I hope you love learning with me. If you haven't yet already done so, give this video a big fat thumbs up so I know I am doing a good job, and subscribe so you don't miss any new videos coming out. Until next time, guys, take care.